go live to the Treasurer on this national accounts number out today. It's a lot weaker than many economists had been forecasting at 0.8% annually. Let's take you there live now to Sydney.
Okay. I wanted to cover off primarily on the national accounts released in the last hour or so, but I also wanted to touch on issues with the Commonwealth Bank, and I wanted to say something about the crypto guidance that's been released by ASIC today as well. Today's national accounts confirm that growth in the Australian economy continues to be positive, but it's weak. Our economy is still growing, but very slowly. It's weighed down by interest rates and cost of living pressures and global economic uncertainty as well. Growth at just 0.3% in the quarter and 0.8% through the year is below historical averages, and it's below market expectations as well. Today's release shows that growth is below what most economists expected, demonstrating that demand in our economy is weaker, not stronger, than they forecast. Now, the most encouraging aspect and the most important aspect of today's national accounts is what it says about real incomes growth. The most important, the most encouraging aspect of the data is the growth in real incomes. And this growth in real incomes reflects the progress that we're making when it comes to moderating inflation, but also solid wages growth and, very importantly, the government's cost of living tax cuts. And at the intersection of those three things, moderating inflation, tax cuts and wages growth, that is why we are seeing real incomes per capita growing in today's national accounts. That's very welcome, and it's very, very important as well. On a per capita basis, real gross disposable incomes rose 0.2% in the quarter. Remembering when we came to office, that measure was falling by 1.6%. So our policies are designed to ensure that Australians earn more and keep more of what they earn. We've still got more work to do, obviously, in that regard, but this data shows that we are making very welcome and very encouraging progress in that regard. Now, Australians would be much worse off, and growth in our economy would be even weaker without our responsible and balanced approach to the budget and without our cost of living support. And what the government has done is maintain a primary focus on fighting inflation at the same time as we don't ignore these very substantial risks to growth in our economy. So if you take the inflation measure in today's data, it reflects again the very substantial progress that we are making. The national accounts measure of prices moderated to be now half of its peak at 3.6%. That's the lowest in almost 3 years, and that moderation in inflation contributed 0.3 of a percentage point to real income per capita growth in the quarter. So that's the inflation part of the story. The growth in real incomes was also driven by solid wages growth. This comes from the government's support for wage rises and continuing jobs growth, which has seen the compensation of employees measure grow 1.4% in the quarter and 5.4% higher through the year. This growth in compensation of employees contributed 1.1 percentage points to real income per capita growth. If you think about average growth in compensation of employees, that is about 60% stronger than what we saw under our predecessors. The rise in employee compensation has seen the Labor share of income rise to 53.5%. That's up from 49.3% at the time of the election. So the Labor share of income has risen to 53.5%, up from 49.3% at the time of the election, and that's a very good development as well. And then the third element of this is the tax cuts. And what you see in today's data is that the government's tax cuts drove a $3.4 billion fall in income tax payable in the quarter. Income taxes fell 3.8% in the quarter, and that contributed 0.8 of a percentage point to real income per capita growth. And so you can see in those three measures of inflation, wages and tax cuts that we are seeing Australians earning more and keeping more of what they earn, and that is very, very important in the context of an economy where growth has been especially weak. Also in the data, we see that new public final demand contributed 0.6 of a percentage point to growth in the quarter. We need to remember that most of this is state spending and that the biggest component of Commonwealth spending is defence spending. So I see that our political opponents are making comments about this today. Very, very strange to be describing defence spending as some kind of sugarcoating in the economy. If our political opponents are planning big cuts to defence spending, they should say so. In the absence of that, they should concede today that the biggest part of the Commonwealth's part of new public final demand is defence spending, and that most of the new public final demand is coming from the states. This is playing an important role in our economy. This spending, defence spending, state spending, as well as our cost of living help and our investments in the NDIS and aged care are an important part of the story when it comes to any growth that there is in the economy at the moment. But the big explanation of the softness in the broader economy comes from weak consumption. Household consumption's barely moved for the better part of 2024. It didn't grow in this quarter and only grew by 0.4% through the year. And we know that's because households are under pressure. We see that in discretionary consumption falling 1.1% through the year. And this is unsurprising given interest costs from the interest rate rises which began before the 2022 election. That explains why Australians are starting to rebuild their savings a little bit, not a lot, a little bit, in their household budgets. And that's why we saw the household saving ratio rise to 3.2% from that very low 2.4% that we saw in the quarter before. So in addition to what's happening with real disposable incomes, the other helpful developments and hopeful developments come from investment in housing and also components of business investment more broadly. These are two perennial challenges that we've had in our economy for some time, and there are some good developments when it comes to housing and when it comes to business investment in these numbers. Dwelling investment grew 1.2% in the quarter. The level of investment in new homes grew 1.7% in the quarter, now 6.8% higher than at the time of the election. That's a good thing as well. And non-mining business investment continues to grow. It's now actually at a record high, and that reflects investment in new opportunities like data centres and the clean energy transformation. Overall, business investment fell in the quarter, but that's because of the completion of some big mining projects. The non-mining story when it comes to business investment are very encouraging. If you look at the impact of global uncertainty and particularly weakness in the Chinese economy, you can see that in the falling exports for iron ore and met coal in the quarter. Overall net exports made a very small contribution to growth in the quarter. A big chunk of this was from inventories, but we can see the impact of a weaker Chinese economy and that global economic uncertainty in some of those elements of the export data. So if you take a step back from these developments and the very specific, very granular elements of them, you can see that the soft landing that we have been planning for and preparing for is on track. The economy is still growing, inflation's in the band, we've got unemployment in the low fours, more than 1 million new jobs have been created, and we've also made some very substantial progress in the budget with those two surpluses, $150 billion less debt, and all of the progress that we've made on the structural side of the budget too when it comes to the NDIS and aged care at the same time. Now, don't forget, over the last 18 months, around 3/4 of OECD economies have had a negative quarter of growth, at least one. A number of them have had more than one negative quarter of growth. The Australian economy has continued to grow each quarter. We acknowledge that that growth is soft. We acknowledge that that growth is weak. And we know why that's the case. It is weighed down very substantially by the interest rate rises which began before the election, combined with those cost of living pressures weighing on household budgets and the global economic uncertainty as well. Now, we know that even with the progress that we've made in the national data, that doesn't always perfectly translate to how people are feeling and faring in the economy more broadly. And that's why it's so important that the defining feature of this government is responsible economic management, fighting inflation and rolling out cost of living help without ignoring these very substantial risks to growth. And there is enough in this data today to encourage us that the series of fine balances that we've been striking, fighting inflation primarily without ignoring the risks to growth, this is one of the reasons why the economy continues to tick over, even as it ticks over relatively slowly compared to history and compared to what many economists have forecast. The other thing that's important to remember is if our political opponents were in charge, the economy would be weaker and household budgets would be under more pressure. And we know these are the risks of the coalition because we know their record. They don't support cost of living help. They think there should be $315 billion pulled out of the economy at the worst possible time. And that is a recipe for recession, and it's a recipe for more pressure for households. The biggest risk to our economy and to household budgets is a coalition government. We know that because we are now into the final part of a 3-year term, and the coalition still doesn't have any costed, credible or coherent economic policies. They won't come clean on the impact of their $315 billion in cuts. They won't fess up that they did not support at any point the cost of living help, which is such an important part of getting incomes growing again in our economy, particularly when it comes to those tax cuts, which they called for an election over.